Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical structure level for this market. This zone, in fact, was acting as previous resistance starting all the way back here, and every time that the market tested its zone, it rejected it to the downside quite aggressively. Right now, the market has broken the area to the upside with this impulse. In fact, this green candle here closed above the zone, and what we know is that previous resistance, once it is broken to the upside, becomes support. The market, in fact, retested this previous resistance turned support here and is currently still in the process of rejecting this historical structure level to the upside. So from a monthly standpoint, at the moment we are still in impulse phase, so more bullish price action could be expected. Keeping that in mind and dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, this structure that the market has created is actually very clear. We have a market which has just broken out from a range. In fact, here in the weekly time frame, we clearly had a range exactly at this zone, which was acting as previous resistance here and previous support here. So the market was essentially stuck in between these two levels, which were tested and respected in multiple occasions. Then with this green candle here, the market broke above the zone, so closed above the high of the range, and that was the breakout from the range. Now, when you have a range and the market is moving within two levels, and then you have the break above the range, at that point what you would expect is to see a retest and then the rejection to the upside, which is in fact exactly what the market did here. After a break to the upside, we had the retest of the level, and currently we are still in the process of rejecting this range to the upside. So here in the weekly, everything seems quite bullish and more bullish price action could be expected. We can also notice how the market has created a series of higher highs and higher lows. And we just had a new impulse and now the start of a correction, which at this point could bring to a potential weekly impulse correction and impulse pattern to the upside to be created. Dropping down on the daily time frame and keeping all of this in mind, what do we have? Now, from a daily standpoint, things are actually getting very interesting. Now, before we dig deeper into what we have here from a technical perspective on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So the COT data, which is essentially what hedge funds and the big players in the market are doing. Now, if we look at here the net positions, what we can notice is that we went from having a quite bearish net positioning with 199.5k net positions, where essentially we had slightly more longs than shorts, but most importantly, we had 72k shorts all the way down to now having the same amount of shorts, but a huge amount of longs compared to the shorts. In fact, institutions have been accumulating a massive amount of longs, going from 272k to 387k, with another 17k longs added to the last report, reaching 300 and essentially 315k net positions. So this is a quite high amount of net positioning, one of the highest that we had on gold for quite a long time. As you can see, the low here was at 140k net positions. Now we are at 315k. So given that institutions have moved aggressively to the bullish side for gold, it's not a surprise that gold has been moving to the upside quite aggressively. So let's keep this in mind and move back to the chart. And by the way, If you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So let's keep in mind that institutions have moved aggressively to the bullish side, so it's not a surprise that we have seen all this push to the upside. Now, the market at the moment, including this move to the downside, is starting to create this M pattern. Now, generally speaking, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the neckline. So essentially the previous support, turn resistance. This is a pattern that the market likes to create over and over again. We can see, for example, here, an example of an M pattern. After M pattern, the market rejected to the upside. We can see, for example, another M pattern here. We had the M pattern and then the market rejected to the upside, completing it at the neckline. So this, as you can see, is a pattern that the market likes to create over and over again. Now, as the market is creating this M pattern again, we have to identify the structure. Where is the structure for this market? For this market, the structure is currently here. This is previous resistance, which is now turned support. And we can also notice that as we have an impulse and on the start of this correction in the form of an M pattern, if we want to measure this correction, we have to take our Fibonacci from the low to the high of this impulse leg, which shows us how we have the 50%, 0.618 and 0.786 Fibonacci retracements exactly inside of this area, which is also the previous resistance turned support. Now, this means that actually we have confluence of support inside of this area because we have multiple layers of support lining up in the same area of price, which increases the probabilities of seeing institutional longing, because we have already seen that institutions are already longing. So if we have confluence of support, that increases the probabilities of seeing institutional longing, which at that point further increases the probabilities of a potential rejection to the upside away from this area. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market during the test of this area, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me.
Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.